Hello, everyone, and welcome to the Pot of Gold podcast, where we talk about finances, wealth generation, and real estate investing. Today on the show, I have Sharon Riddle, and over her career, she's worked in several different companies with nonprofit organizations and government agencies. She's provided business solutions in the areas of software upgrades and business process analysis, and has conducted best business practice research for over 30 years. She began investing in single-family real estate in 2005 with her husband and business partner, Dan, and she took a leadership role in managing all facets of the business, including property analysis, acquisition, rehab, property management, and resale of properties. And they started the transition into multifamily real estate in 2015 through initial education and investing passively in 18 properties in Texas, Oklahoma, Colorado, Florida, and Ohio, totaling in 3,507 units to date. Thank you so much for being on the show today, Sharon.
Well, thanks for having me, Nathaniel. I always love talking real estate, and I know you do too.
Oh, definitely. And I'm looking forward to this interview today. It's a genuine pleasure to have you here.
Great.
So just to get started, I'd like for you to go over a little bit what we've already talked about with your intro. How exactly did you get started with real estate in 2005? What prompted that decision?
Well, it was really multiple streams of income. I'll just be honest with you. Both Dan and I had W-2 jobs. He's aerospace guy. And I had my financial analyst job. I've been a senior business analyst. So the analyst kind of world, whether it's financials or systems. And we just really wanted something on the side. We did not really feel like the corporate environment was the same corporate environment that my father-in-law, Charles Riddle, had spent his lifetime in. Arco Oil and Gas had taken care of him the entire time.
Oh, okay.
That's not our reality. It's not a lot of people's reality. And so it started out as a side hustle. Dan came back from a managing your money seminar, and he's trying to determine if he wanted to be a day trader or if he wanted to be a real estate investor. Well, he decided that he really did love and like our daughter and me. And so he needed to see us, and he didn't want to be stuck in a hotel while we're out on the beach in Hawaii, because he had to be, tied to his laptop as a day trader. And so that's how real estate won in the very, very beginning. And
I like that.
And because I'm a construction brat, my dad was always laughing because here I am. I end up being the landlady initially, and I end up managing the whole single family portfolio. Well, I could really turn houses faster, get tenants in, establish a process faster than the person I hired to be my property manager for the portfolio. So then I just got that job. I took the money personally because it was my money. And he was just kind of a little more nonchalant about stuff. Of course, it wasn't his money. And so I found I just could really master this whole process. I had an excellent real estate attorney that I worked with. She is still my friend. I have a shout out to Gayleen Lonergan in Dallas, Texas. She's helped me with a lot of single family transactions. And we still go to dinner. I owe her a turn, so we're still going to be going to dinner. And I just really was able to build out a really great team. The handymen, the contractors. It's no big deal working with handymen. My brothers and I were free labor for construction dad. So we knew a thing about building a few things, including outbuildings. And what we didn't know, we could kind of figure out. And I also went to some seminars to learn some nuts and bolts of single family. And way back in 2005, it was with Russ Whitney. And we are even still in connection with an early coach of ours who we met in 2006. And we sponsored his real estate club. So I'm going to shout out to Jimmy Reed, who is the organizer of One RE Club, because we sponsored the club. And Jimmy knows a lot of stuff too. And that's why you can learn a lot of stuff too, going to meetups. And back in that day, it was RIAs. And so that's kind of how we got some of that early start. We understood how to build out a team. And because I didn't think it was really good fortune at the time. My girlhood was not frilly. with the brothers and the construction dad. But I learned how to be around a lot of craftsmen, men and women who are master plumbers and master electricians. And so that's kind of what I sought out when I had my single family portfolio. I was looking for those really, really credentialed people, and they never failed me. They never failed me. When I would tell them the story of my childhood, they were like, "Oh, you're a construction brat. You got this down. We can just talk scope of work, knock out the jobs."
They reduced the friction a lot, huh?
Oh yeah, and I would always surprise them because I was female, so they didn't expect that whole package to come with me. But thank goodness, I guess, for construction dad. So there you go. It all ended up really great in the wash, and my dad always got a really good laugh out of me starting this side business in the very beginning, because he just thought it was humorous, because I always said I wasn't going to start my own business. And my dad had his own business. I had two uncles that had their own business, but they all had businesses that had a real seasonality to the cash flow. And that was what I didn't like. However, I had a neighbor who owned a toy store, and she actually also had residual income from an independent grocery that was her late husband's partnership with a brother. And she had real estate investments. She was the only one of that crew that had real estate investments. Well, she was the happiest lady on the block, I can tell you, because she would get the gain on the exits. And she was the one who ended up buying our house and using it as a rental. We moved to a larger house. My dad saw 6 acres he liked, ended up moving there. And who but Mrs. Leona Shepard McDaniel bought that house. But a great story about her. She actually had a business fraternal organization she was part of in Denton. And they gave her some tips on some real estate in Florida. Well, guess what? The whole strip that they bought collectively, and they really operated as a bargaining unit together, because they were all business fraternal friends. It ended up becoming part of Epcot Center.
Wow.
Who would know, in Denton, Texas, of all places, and the neighbor who was on my block. She was always trying to teach me business stuff too as a girl. It was very interesting.
Well, it's interesting that you mention it that way, because I've found, as I've networked and gone out to talk to people and I've traveled, the world feels a lot smaller than I expected it was when I was just staying at home all the time. People connect, and it allows you to be resourceful and find things that happen like that. But if you're not out there looking at problems and trying to find the opportunities, you never see them.
And one of my single family coaches connected me with Brad Sumrock in 2015. So that's how that connection. I got the promo code to go to his Rat Race to Retirement event for free, because I knew Dennis Henson over in Arlington, Texas. And we just saw that there, as far as multifamily, the scalability. It had the scalability that we really lacked in single family. That's how we ended up with more doors.
Well, I'm a little curious, because between 2005 and 2015 was the 2008 crash. How did you guys weather that?
Oh, no, that's always fun. There's a lot of people that didn't make it through, honestly. Yeah. But what I did, 2008, 2009 time period, I had another coach in my pocket. Alan Calgill was teaching people how to work with private lenders. Well, since Chase Bank didn't want to loan money to us for additional acquisitions, my neighbor, who's a nurse, wanted to do that. And that's how I ended up working even more with this friend of mine, Gayleen Lonergan, because she was doing those promissory notes, because I was working with private lenders. Went to Alan Calgill's boot camp, had a friend who was a banker, had a friend who was an IT project guy, the neighbor, my father-in-law was on a couple of projects with us. They were all the bank. But I learned how to do it well. And we picked up a lot of properties in that time period that were HUD acquisitions. So I had even met the person who became our HUD buyer at a networking event. He just seemed like a young guy that really wanted to get things done. And that's how we ended up doing business together. And he was kind of like our HUD guy. And that's how we expanded the portfolio more on the single family side too.
That makes sense.
Always have to be looking for solutions. You're so right about that. And we talked about that earlier.
Well, I think that that's really cool that you've highlighted the fact that the private money was the thing that helped you guys get through things, because it ties into what we've been talking about, the importance of networking and having those connections. And so that enabled you to overcome struggle or hardship that a lot of other people weren't able to overcome because maybe they lack those kinds of connections.
Well, I will tell you, I had a banker, and I have really only done, after Chase really wasn't helping me with my businesses, I work with community banks, and I suggest other people work with community banks. I do that for some ease of transaction regarding some of my personal account, but all my other businesses have community banks tied with them.
There you go.
And they're willing to work with you, and they just make things easy. And they want real estate business, and they invest in communities. And so we have like 4 different banks we've worked with that are community banks that make things happen for us, because you got to wire the money, you're doing transactions, you got to take care of stuff. But I will say, even back in that time period, I had a person who was one of my early loan officers. And he's like, you're coming in here, you're bringing, in the old days, you bring in your rent checks. Well, he's like, hey, girl, come in here. You're just bringing these checks, but you're not talking to me about loans. I said, yeah, it's because nobody wants to loan money. And so, Eric, I had to go to a boot camp, and I'm working with private lenders. And I got friends who want to be my bank. And he's like, oh, man. He knew what I was up to then. But anytime after that, he would see me, I'd have to come into his office, and we'd have to talk about real estate and how I was making that private lending thing work.
And to just kind of explain that a little bit to the audience for anybody who doesn't understand, what you can do with real estate is that you can have money that you borrow from other people. You create what's called a lien on the asset, which kind of leans against the asset. So if you default for some reason, they can possess the asset and then get their money back. And that's part of the reason real estate is really good, is because it's backed by something solid that you can use to recuperate loss. However, what we would refer to these liens or these private money loans, they're a debt instrument. And so what you do is you pay them an interest payment every month, or based on how you structure it. And so they make money, you are able to obtain an asset and solidify it, and it's a win-win situation.
It really is. And in multifamily, we have something that we call syndication. Mm-hmm. So, and it's just like a group purchase. If you boil it down to its essence. And that's where other people like me are making money off of an asset. There is there's a property management company coming in if it's about 100 units or more. And then there's an asset management team. And they're doing their thing to make sure that the property's staying on track. And I get financial reports. And since I've previously been a financial analyst, I get to read all the reports, and I do whip through them because I've spent a lot of time. I spent 10 years just on the multifamily side. So if I see some numbers I don't like, some key performance indicators or some financial targets or variances I don't really like, I talk to my sponsors. They know I'm coming. They know that I am coming. And it's not like a shark. I'm not mean. I'm just determined, persistent.
Well, because of your experience, you're able to see it and understand it really easily.
Yeah, they know that I can just get it. And they're like, oh, hi, is Dan reading those monthly reports? I said, oh, hey, that's kind of my designated area. That's like within my wheelhouse. He can read them, but I can read them fast, and I can be having a conversation with you at night by the time he rolls around going through all the numbers.
Got it.
I've just gone through so many of them. And half of our multifamily portfolio has gone full cycle. So we've already reaped some of the gain of the exit. And we have a property in Columbus, Ohio that will be selling this spring. And so it's been a longer term hold. So we think that that's going to come out very well for us financially. I will say some of the more challenging portions of the portfolio have actually occurred post-COVID. So 2022, 2023, but debt was more expensive.
Yes,
So
definitely.
much really, really is indicated by debt and the cost of debt.
So, out of curiosity, you said that you switched over to multifamily because it's easier to scale. Did you dispo all of your single family assets, or did you hold on to those? What happened with that?
I did a stagger sale, so I could actually take the gain and plow that back to I could plow it into multifamily. So I wanted to minimize that tax experience.
Mm-hmm.
I'll want to do that, and that's why I really like multifamilies for the tax side too. Those tax advantages, because in the time period that I have invested, we've seen bonus depreciation. And there has been rumblings in the industry that could come back at 100%, like what we had seen in 2017, which was really pretty awesome. And that it could be retroactively credited.
Oh, wow.
And so I'm like, we'll see if that really happens, but that would be really, really excellent, because when I had my single families, you'd be limited for your carryover loss. And then you get the full loss after you really sold the property. So you really had the single families for cash flow. And so that was kind of its stronger instrument. But I will say, I even have some other assets along with the multifamily as my investment portfolio. Have a triple net. To let people know, that is just a longer term lease. So in that little triple net, it's got some AutoZone and some Family Dollar. So some of those tenants that have the longer term lease, so you can reap the benefit of the cash flow. And
Interesting.
it's in a fund. So part of the fund did better in 2017 because the debt was lower than some of the other outlying years. And so there was a real change in performance. And you can see that in some other assets too. But right now, it was kind of like almost back to the future, because I'm in two mentor groups. And in one of my mentor groups, I met a gentleman out of St. Louis. And what he does is he has single family rentals in St. Louis. However, he has set aside properties for a fire insurance company that he has established this relationship with. And so now I'm a private lender for him on a property that a family who has experienced some fire loss and damage, they're living in the house. I just thought his business model was really intriguing. And I just happened to be at a Raised Master retreat and sit at the guy's table. But real estate is like that. Things can happen, and you start having a conversation and you're thinking, oh, I could use part of this solution that this person is really building out a business on. And he was talking to Dan, my spouse and partner, about how he had hired a operation director. And so he was adding 40 more houses onto his portfolio and getting those deployed into the mix. But he was using something that I had used with other people. And so we really understood the whole concept, and we understood the legal instruments as well. So
very neat.
Yeah.
So you mentioned
it can come full cycle.
Yeah, definitely. And I think that real estate in general is kind of cyclical. But you mentioned that you had some issues more after COVID than pre-COVID. What exactly were the issues that you ran into, and how did you get those solved?
Well, I will say on the multifamily side, it's been part of the price of debt. And so all those successive interest rate hikes, they really made bridge loans far less attractive.
Got it.
Far less attractive. And then there were some general partners that I believe have had to really tighten up some of their asset management practices as well. Because when the money was less expensive, it wasn't super hard to make money. I had properties that were going 3 times on the return in 30 months, even with a fire. I actually did have that situation in
Wow.
Duncanville, Texas. So, and it's not the only property I've had that's gone through 3 times the return. So, but I will say those are contributing factors, I think. Higher cost of debt, and we have no assurance that the interest rates are ratcheting down yet. They've held steady. And there are several of us in the real estate community and the industry. We're always wanting to know what the Fed's doing. It's like, are they going down? Are they holding steady? What's going on? Because we really would like a more favorable situation regarding procurement of debt.
Yep.
And then asset management too, really tightly managing the asset. And some of those issues too on asset management side even have been tenant screening. There have been some tenants who have become more organized and systematized in how they are protesting evictions. So they kind of want to be squatters a little longer. So there's more cost in the day-to-day operation for that. You know, you have to hire an attorney to do kind of go through all that process, even the protests, but also even labor and material, the expense of labor and material.
Yeah, and the price of wood and everything had gone up.
Price of wood, price of labor, and then also being well capitalized going in, because there's been an expectation that some didn't need to be as well capitalized. And I have actually seen general partner teams who have redeployed capital into properties to maintain a well-capitalized position. So you did not see that in 2015. You didn't see that post-COVID. So I am seeing some of that now. And I'm having very difficult conversations with some general partners. We're friends. We respect each other. We value our relationship. But I'm having to do some of the deep dive and say, where's the solution coming forth here? And then I have to remind them at least where the financial position is, or where's the occupancy, where are those key performance indicators at that point? Because there's an expectation, if you're at a 2-year midpoint, that your numbers need to be higher. And they don't like to do that from me, but they know via industry standards that's true.
Well, and the other thing is I think that it's very important, and it's even a skill to have hard conversations, because if you're just ignoring problems, they don't go away.
They don't.
You have to fix them. And the more you ignore them, the more work you're creating for yourself.
Well, and even this week with one of my general partners who's out of Colorado, she said, Sharon, you're the only person who has these conversations with me. And I said, I wish more people had those conversations with you. I said, they're not fun. I said, they're really, in some ways, they grind you down a little bit and they grind me down a little bit, because I said, but I really think you need to understand what I'm reading and what I'm seeing and what I'm understanding, because you need that barometer of where I'm at. Because and this is one thing I'd like everybody to remember, all investors have dreams and aspirations. And the last thing you want to do is crush aspirations and dreams. You want to be a really expansive place for those kinds of things to occur. You don't want to be, because that's why people leave W-2 jobs. They don't want their souls crushed. They don't want extra toxicity. So I guess I try to be the face. Sometimes an investor, you think about what they contributed, what they brought in. They see them as a number, especially if some general partners are engineers. They're very number dominant. So I like to try to bring the human element in there too, because this particular general partner, I've known her so long. She knows my daughter as well. So it's kind of like building multi-generational wealth here, and I don't need any of that wealth vaporizing. Let's get this property on track.
Well, I think that's
some solutions will come. I think sometimes some general partners are having to dig really deep for some creative solutions, not just bringing in preferred equity, which realigns the capital stack. and I want to spend a moment on that.
Go ahead.
Because with the capital stack, if you've got a syndication and you've brought in some limited partners, bringing in a preferred equity could possibly, depending on the terms, the preferred equity people or a fund is brought in, they could circumvent the position. And we're talking debt position.
Mm-hmm.
I know you understand all of that really well, but because you don't want to usurp or displace one group over another group. If you're wanting to make sure you're well capitalized, the last thing you want to do is make sure one group is well taken care of. But if anything, it becomes more challenging on a property, especially a multifamily property. You don't want another group of people to have to experience a haircut. You don't want them have to take some unnecessary risk and some unnecessary loss that they did not come on board for when they signed all their legal documents, which would be the private placement memorandum.
Well, and it's also going to be one of those things that the more issues you cause, the less likely the people are going to want to reinvest later.
You'll lose some of those investors.
Yeah, there's no guarantee that you're not going to have problems, but the amount of friction that you can reduce is going to be able to cause that reputability to be more likely.
And I will tell you that I have used my position, I've leveraged my position as an investor who has invested multiple times with that general partner. So I have leveraged that because we have been through some good times together. With one of these properties, it's a little more of a grind, a little more of a strain. And then we have another property in Colorado that seems to be humming along pretty well. The occupancy seems to be in a good place. And it's a SBA loan. It's two properties that we're able to get an SBA loan. So the loan makes a huge difference, but also the debt and the asset management. It's just so critical. And being able to have a bi-directional conversation, because I will tell you, while there's so many general partners out there who are so gifted and they come from the engineering world, they want to run and duck and hide from people. Give me the numbers. Give me the numbers. I want to talk to the people. And they've got to do both.
My business coach, Dan Martelli, says business would be easy if it wasn't for people.
Hey, it would be. Well, you've got a good business coach with Dan Martelli. Yeah.
Yeah, he's phenomenal. I've learned a ton from him, and I've been able to change a lot of my habits and behaviors to become really consistent. So kudos to Dan Martell. Thanks so much for what you've done for me. Well, I'd like to know what are the plans for you guys going forward here?
Well, we do look forward to being on a general partner team, so a co-general partner. I had a conversation with an engineer. We love engineers too. We like the engineers who really talk to people well too. That's always really a great
engineers.
We love those engineers with all those soft people skills as well. They just like our absolute favorites. But I talked to a person just last night, so we'll see when we can have dinner, and she and I can talk. And her spouse is an engineer, so there's more engineers out there. So we're going to have this conversation. I continue to work with 2 mentors, so I'm going to give a shout out to a couple of my mentors. Since you shouted out to Dan, I am going to shout out to Brad Sumrock, who has taught me a lot of nuts and bolts regarding multifamily and has been my podcast cheerleader. He gives me the moniker of podcast queen within his mentoring group. I'm in this mastermind as well. So I am in Multifamily Millionaire Mastermind. I've been in that group since 2019. I've been with Brad since 2015.
Okay.
And I also want to shout out to Hunter Thompson, because Hunter Thompson and his coaches have really been pushing me on the ebook, which I'm in edit mode on.
That makes sense to me. 1 second. I actually got this right here. I've been reading his book.
That's the first thing I did. I read that book, 3 years ago. And then I had another friend who was on a letter of intent with us regarding some general partner properties, some in our buy box, and he was my referral. Invited me to Raise Fest last year. Spent a year in that mastermind, Raise Masters, and they have been really working with me to also be on podcasts, but to launch my own podcast and have webinars and use AI. So use Chat GPT 4.0 and develop my whole profile for avatars for Dan and for me. So all of the stuff that honestly my brain gets fried on certain days with those guys. And one of the ladies too. So I have to have a shout out to Catherine Bell, who blows my mind honestly with all the AI knowledge she has, and she's writing a book, and it had encouraged me to actually think about being an author on a book. And so I am completing out a chapter that I'm contributing on a multi-author book on networking, because real estate, it's all about networking. It really is.
It's all the relationships.
One of my earlier podcasters, Kim Walls, invited me to do it. And you never know what podcasters will help you with. You really don't, even as a guest. So
that's actually been part of the reason I've really enjoyed doing podcasting, is I get to talk to really interesting people and I get to learn things from them.
They do a lot of interesting things, and there's always takeaways.
Definitely.
There are always takeaways. And right now, I'm working with my marketing team to create more lead magnets. So we got one lead magnet, but we're working on some other stuff, finishing out the ebook, finishing out this other book. And then this month, Brad, I was teasing him a little bit because we've been with him a decade now. Next month, it'll be a decade. So we were featured in his mentoring newsletter. So I said, wow, we get to be in the decade club and then we'll get featured. He's like, man, Sharon, don't be like that. But anyway, we have that kind of relationship. I can tease my
some friendly banter, right?
Yes. Both of my mentors will have some friendly banter with, and they said, but they'll still turn around and say, now go do that work. Go do the work.
Well, that's the sign of a good mentor, to keep you on task.
They do. And they really, really, both these gentlemen are really serious about me having my SMART goals and staying on task. And if you want to take a moment talking about SMART goals, I know SMART goals. Coach has SMART goals for you too.
I definitely I like SMART goals. I think that sometimes when you're first starting out, they're a little hard to do because one of the letters represents realistic.
Or relevant.
Or relevant, yep. And so people, when they're first starting out, don't understand how that can apply to something they want to do that's really big. Because they say work from the back to the start, but when you haven't done anything like this, you don't even understand what's possible.
I will say that's a good point, because I will say I didn't totally get that when I was just acquiring single family homes in the beginning. But over the last few years, and especially last year when we were in Reunion, Florida with Brad, we were going over SMART goals, and what we were doing, he was bringing in some techniques he had learned from Tony, and he was in Tony's elite group. But anyway, so he was making us go backwards. So we were re-engineering goals, starting with what are you going to do in a year? So what's going to be first? What's going to be year 3? What's going to be year 5? And now, swimming around in my head, now I'm thinking about year 5 and what I want my net income to be, and year 10. So all these things, and I'm like, well, this is really possible. It really is possible once you start building those things.
Yes, very much so. I think that it's important to keep in mind that you're going to learn things as you progress. You don't have to have everything figured out right from the get-go. You just got to move forward, and the pathway will make itself clear as you make decisions and you make mistakes, because that's part of the learning process.
Right. In case in point, just yesterday, I reached out to a fellow Raise Master who has her own marketing company in San Diego. Well, what are we talking about? We're talking about pitch decks for webinars. Well, I didn't know anything about that, but I'm like, oh, I think Adrian knows a lot of stuff about that. So we're setting up our time to have that conversation. And then I had another conversation with my accountability coach with Raise Master. So Hunter's really cracking the whip on me on that one. So Josh is in here saying, well, how are your posts doing? that could, how those impressions and comments and all of that data, all that hard data with your post, that could be the indicator of the topics that you really need to cover in the early part of creating these webinars and these pitch decks. So
pay attention to the analytics.
Yes, we definitely pay attention to the analytics, even though I will say there's a couple of people within Raise Master that they bring in, and they're called Sharon and Jay. They like destroy stuff you're doing that because you're on the wrong path, or you've got the wrong avatar, or you just post something up. But it's tweakable. Whatever you up is tweakable, but you're not going to get the success you want. And so Sarah and Jay are kind of known to do that kind of thing and give you that quick feedback, frank feedback.
Be objective about it.
They're very objective. They just come in and like, who's the volunteers? Who's willing to be on the hot seat and have us look at your webinar? So Sarah and NJ looking at my webinar. Oh, that's kind of frightening. But anyway, just different things like that they just quickly give you that. And it's just such a sense of community within both of these groups. And even some friends that I have befriended with Tim Mai's Hero Alliance, and they're capital raisers too. And so it's just a lot of camaraderie and people, when they know that you are really wanting a solution and you're wrestling with a challenge, they'll keep you in mind and say, oh, why don't you try this? Because I think that might help you with your problem. Because they do take, I have found a lot of people over many years have taken my problems to heart in real estate. And I have been a better person for it. The last thing you need to do is clam up about things. You need to talk to people about what you're trying to wrestle to the ground. So you can really conquer the fear, but also conquer the challenge and really pivot that challenge into a solution and a positive outcome.
Well, and all of us go through these challenges. And I think the more we're open about those things, the more people can relate to what we're going through. You can be like, hey, I've gone through something similar. I have an affinity with this person because they're experiencing something that I experienced. And that solidifies all of your relationships.
Definitely does.
Well, very cool. I'm excited to see what you put together with this. What exactly is your ebook about? I know your book's about networking. Is that something similar for your ebook?
This is going to be real estate. It's going to be real estate. So it's going to be 8 chapters. But and I'll put a teaser out there. My first chapter is about your why. It drives everything. So that's all I'm going to tell everybody. So they have to read the rest of the ebook. That's my little ebook teaser, because you'll read the rest of the ebook and you'll get a lot out of that. And I think I'll have opportunities to join some other people and do some other work too. Since I've been doing some writing, I'm like, oh my gosh, I haven't written so much since I was in a creative writing class in high school. I was working on an MBA and I was writing all these papers in a controllership class. But I have found, because I've been working hard at mastering this, and I have a formula for my posts too, thanks to Hunter Thompson. I'm not just whatever's popping out of my brain that day. It's really got to be something that's teaching some people or sharing some things about my fears and limiting beliefs.
It's structured.
Some pulling back the curtain, even what I put on Instagram. We were pulling back the curtain that I was going to spend some time with you today, Nathaniel. And then some nuts and bolts of how things occur. And I think a lot of that we kind of delve into on podcasts. And that's why I really thoroughly enjoy being a podcast guest, because there's always something that we can do a deeper dive on that really is in my brain, on my lips, and in my heart, that I think needs to be out in the world for people to hear and figure out that they're not alone in a lot of different challenges.
Definitely. I appreciate that. And there's been a lot of people that do podcasts that have provided that for me personally. And so that's part of why we're here today, is we're trying to do this something similar. And maybe we can't help everybody, but we can help somebody. Just want to get it out there, because if we don't put it out there, they'll never get that help they need.
They never will. And I will say I've been absolutely shocked that I even have some mastermind friends who go, and when I put something out and talk about having some content out, or it's coming, or I'm talking to somebody on a podcast, a host on a podcast, that that they search for my content. I was really, really shocked. And I thought, well, they're searching for one episode. It's kind of like they're searching for one. No, they're kind of binge watching. I'm like, oh, this is feeling really interesting and different, because these are people that we're all in this millionaire mastermind together. And so they're trying to glean some takeaways from my content. So I really want the takeaways to be there. But I'm just kind of shocked, and I am flattered and honored that they take the time to do that. Yeah. And some friends I've had like since middle school. I have a friend who's an engineer, of course, another engineer there. We got him in real estate. And he does some binge watching too on my content. He's always wanting to know what I have to say to people and what other people have to say to me, and what we're talking about, and illuminating people on whether they're challenges or positive outcomes or just what's going on in the industry, in real estate industry.
Well, you never know who's watching either.
You never do. It's kind of eerie.
Yeah, yeah.
Especially when I just was casually told that. I was just honestly, I couldn't speak for a moment because I was just so taken aback. And they're like, "Are you okay?" I'm like, "No, I was just kind of a little taken aback because I thought you were just looking at one or two, looking at everything that's on my YouTube channel coming out." I'm like, "Whoa."
Very cool. I like the fact that we're getting into this because it's something that I've noticed as well. And heck, I want to just take the moment and tell everybody who's subscribed to my channel or who's watching, I appreciate you guys. I really do. The support is one of the things that keeps me going and keeping me doing these things. And just thank you. Thank you so much for that. Now, before we move on, I just want to know, where can people connect with you, Sharon? You're an awesome person. People want to get to know more about you. Where can they find the information that you're putting out?
Well, I do have my website. So that's www.excalibur, no, it's EXCALIBRE, Texas.com. So we've got the website. But like Nathaniel here, we are very social people. So I am on LinkedIn and Instagram and Facebook. But I will say I have some awesome communities that I'm building out more on LinkedIn and Instagram. And I if you're interested in following me and the people that I follow that are real economic nerds, especially in the real estate quadrant, I follow people like that, just letting you know, because I'm a woman who is data driven. So I follow these data driven men and women who are sharing a lot of things with me every day in their posts, including not only what they're writing, but text, their charts and their graphs. And because honestly, I'm a former analyst, so I'm just kind of a nerd like that. It's in my blood. I whatever was in my blood as a child, because I had some girlfriends that teased me as being a math girl. It's only gotten worse, my friends. It's only gotten worse. It's just what form are those numbers going to take, and how are they presented? I just love them all.
Awesome. There's worse things to be too. I aspire to be a math nerd one day.
We all have it within us. We all have it within us. I firmly believe that.
I agree. Definitely. I think there's no skill on the planet that you can't learn if you apply yourself consistently enough and long enough. You can obtain those things if you really want them.
You do have to be persistent and consistent, for sure.
Definitely.
And that's not anything new. We learned that a long time ago from the Stoics. Marcus Aurelius in Meditations. I have to give him a shout out on his book.
Yeah, definitely a lot of good things that he's written, and a lot of inspiring things too.
Yes.
Well, I really appreciate you being on the show today, Sharon. Is there anything you'd like to share with the audience before we get off for today?
Well, I would like to leave with just a little mental picture. The mental picture I want to leave everyone with is that you really can lead your very best life. It is really within your grasp to do it.
I definitely agree with that 100%. But you don't ever make any of the shots you don't take. So take that shot, you guys.
You got to take the inspired action.
Yep, exactly. Well, thank you so much for tuning in and listening. This has been the Pot of Gold podcast, where we talk about finances, wealth generation, and real estate investing. And thank you so much. You have a wonderful day.
Thanks so much, everybody.